Hello everyone, welcome back to my YouTube channel. We have experienced the worst stock market crash since February. That's the worst crash ever since the financial crisis. I am very unfortunate that I invested my money with M1 Finance just before the crash. I established 3 accounts since 2019 in September and 2 accounts since November. And since the crash, I hold on dearly to my accounts without selling any single stocks, including airline stocks as well as the cruise line stocks, as well as those casino stocks, REIT stocks. My question is that worth really to invest your money into stock market? Because you never know, right after you put in the money, a few months later it could be crashed again. So in today's video, I'm gonna show you my 3 accounts, their performance during the worst stock crash during these months since February until June as of today. Today's date is June the 6th, 2020. So without any further ado, let's get started. I'm going to just use the charts to show you how the broader market is doing. This is the charts from eTrade, commission-free online trading platform. On your right-hand side, you can see it's a 3-month chart. On your left-hand side, you can see it's a daily chart. This is how Dow Jones was performing during the crash. As you can see, ever since February the 14th to March the 23rd, it crashed about 38%. And since then, it gradually recovered until yesterday, Friday, June the 5th. It returned to 27,111 points. That is almost a 47.9% return. But we still need another 9.43% to return to its pre-crash high, which is this line. So what is Nasdaq is doing? Nasdaq is doing much better than Dow Jones in terms of recovery. You can see the true V-shaped recovery for Nasdaq. However, Nasdaq from February the 20th till March the 23rd, it dropped a whopping 47.96. That is almost 48%, 10% more than Dow Jones. But since then, it recovered completely and even surpassed the pre-crash line briefly on Friday, and now just sitting right below that line. So it is a complete recovery for Nasdaq. For S&P 500, it crashed all the way from the highest high to March the 23rd. It was a nosedive of 54.2% drop. And since then, it gradually returned until Friday. It's a recovery of almost 45%. And then we're still waiting for another 6.26% to reach to its pre-crash level. So you can see how brutal the crash was, right? The nosedive from here to here, it's a straight line down. You can see so many institutional investors as well as individual investors, they're liquidating their stocks. That's why you can see the price going lower and lower and lower straight down. And then you can even see the death cross occurred on March the 27th for the S&P 500. That is when the 50-day moving average crossed the 200-day moving average and moving lower. That is how brutal it is. And then because of my bad timing, I did not start my long-term portfolio anything sooner, not like in 2015, 2016, and 2017. I started just right before the crash. What's the timing, right? 2019 in September, I started my first portfolio, Roth IRA with M1 Finance, and then 2 more portfolio with M1 Finance in November. The thing is, I did not use the all-in method. I used the dollar cost averaging. So I was just buying and buying, gradually buying and buying and buying so much just before the crash. And then when the crash occurs, I still selectively buying, right? So let's see how these accounts are performing today. and see if it is worth to invest in the stock market when you're facing the crash like that, unprepared. If you're unfamiliar with M1 Finance, M1 Finance is an online trading platform. It only has 2 trading windows, one in the morning, one in the evening. Doesn't have the active trading capacity other than these 2 trading windows, but it does allow you to buy fractional of shares of any stocks with any amount of money. And now also it has an automated buying for you. You just only need to give order how much amount you want to invest in your preset portfolio, and then the platform will purchase those stocks with your order and with the allocations you pre-designed to any stocks in your portfolio. If you are a trader of the stock market, you know timing is everything. If you are a long-term investor, although you cannot time the market, it is still very important. Person like me, unfortunately, invested so much just before the crash. I experienced the pain, lots of pain. All right, so let's see how my accounts are doing today. So for taxable account, overall value as of today, I gained about 0.33%. I first started here November 26. For one day, I gained about 2.57%. 1 week, 8.19%. 1 month, lucky, I gained 16.66%. 1 quarter, 5.77%. 1 year, of course, the same as all time, because I haven't had even 1 year yet. All right, so that's how my individual account just made it slightly even, earned $80.56 during the worst market crash. All right, so for my Roth IRA account, which I established back in September, it's still not totally recovered yet. I still have $309.85 below the level that I started investing. So 1 day, 3.3% increase. 1 week, 9.4% increase. 1 month, luckily 18.69% increase. 1 quarter, 3 months, 4.09%. And then 1 year, and then all time is the same. So I'm still $309 down. For my traditional IRA, all time, I also established back in November 27. All time, I gained about $709.39. That is about 2.63%. All right, so 1 day I gained 3.24%. 1 day means the past Friday, which is June the 5th. All right, 1 week, 9.58%. 1 month, 19.67%. 1 quarter, 8.9%. 1 year, and all is the same. So why my Roth IRA sank so much, but my traditional IRA and taxable account is not, is because in my Roth IRA, I have all those fancy stocks, airline stocks, as well as the casino stocks, as well as the cruise line stocks, all that. All right. So total, believe it or not, after all that crash, and then without even selling one single stocks, I'm still gained about $480.10. Another good news is because I intentionally to set all these 3 accounts to earn dividend. So regardless, some companies may hold or suspend their dividend nowadays, I still from February until June the 5th, I gained about $773.53 in dividend. Of course, I reinvested all these dividends back into my stock. My total, I started at $106,300.97. Right now, I gained about, I told you, about $480.10. So I did not lose money. And then within this amount of money, I still holding 20.42% cash. That amount of cash really saved my behind during the crash, because I have the means of using my existing cash to gradually buy in even at the worst time of the crash. March 23rd or March 20 or whatever the worst, all right, when Dow Jones go down 2,000 points in a single day, I can still have the money to reinvest. That's why it saved my portfolio as of today. So to answer the question, is that worth to invest in stock market? My answer is absolutely. Even in the worst timing that I just had. Because as you recall, I explained to you earlier, Dow Jones still have 9.43% to climb to the pre-crash level, and S&P still have 6.26% to climb back to the pre-crash level. And then Nasdaq just sitting below the pre-crash level, that line. But my portfolio, even at the worst timing, I still gained about $480.10. That is just about 0.5% gain. But in the meantime, I received $773.53 in dividends. And that dividends will keep snowballing and keep paying me in the future. And then because I did not sell any single stocks, I did not liquidating my accounts during the worst crash. That means I dodged the bullet. I did not buy high and sell low. I did not force to bleed my accounts, right? And also currently, as I told you, I have 20.42% in cash. I will use that cash gradually, still when I see fit, when I see red in the stock market, even somebody predicting the stock market is gonna crash big again in the future few months, I will still dollar cost averaging. I will still keep buying and buying and buying and keep still building up the stock portfolio and then generate the dividends continuously for my lifetime. So it is truly worth to invest in the stock market, even though I had the worst timing. This is the statistics generated from M1 Finance for my PI, for my taxable account. So if I were holding the stock portfolio from March 2019 until now, I would have gained about 12.61% regardless the stock market crash. So totally I have 52 different holdings in this portfolio with an average dividend yield about 3.77%. Expenses ratio is also very low, 0.01%. For my Roth IRA account, I'm currently holding 46 different stocks and ETFs. Current dividend yield is at average of 3.8% and with zero expenses ratio. It is holding in this 8 different slices of this pie. And then if I were holding the stocks from April the 19th, 2016, even with this worst crash 4 years, I would have gained about 68.43%. That is very healthy. For my traditional IRA account, I currently have only 8 different stocks with the average dividend yield at also around 3.8%. Expenses ratio is slightly high at about 0.05%. But if it is less than 0.1%, it is still very healthy. So if I were hold the stock since June 2015, in 5 years, regardless the worst crash we just experienced, my portfolio would have gained about 68.50%. So it is a very growth-oriented portfolio. As you can see, those are the stocks and then ETFs that I'm currently holding for my traditional IRA. Just to give you an idea, my portfolio grows so much is also because of one fact that I do not own any bond stock or bond ETF because I don't believe it. I see those bonds, they don't grow much during the crash because it's designed to protect your portfolio. But when the market go up, it hardly moves. So I do not believe bonds. It's against lots of Wall Street analysts, their opinions. But I do whatever I feel fit. So that's my stock portfolio design, and I have full confidence that it will withstand any crash in the future because I still have 21,800 cash in the accounts I can invest. And if I run out of those cash, I can still put in more money. Oh, just by the way, if I forget to mention, from February to June, I totally invested about $23,381 into my 3 accounts during those worst months. That's why my account grow much better than Dow Jones, much better than S&P 500, and slightly better than Nasdaq. If you like today's video, please do not forget to subscribe, like, and comment, and share the video with whoever you think will be benefit from today's video. And also do not forget to smash that notification bell so you'll be the first one to know when my new video comes out. Thank you.